Liberia says the country will invest $100 million into the Simandu rail projects that will help Guinea move this iron ore from inland part of the country to move it out to the seaport of Liberia. Liberia wants a share of that multi-billion-dollar business and is investing $100 million to support the rail line that will cross the country into the sea. Let's come back home. In Nigeria, economists, investment experts, and analysts have been swarming over Nigeria's New Year budget, which was presented to the National Assembly on Friday by President Bola Ahmed Tinubu. Earlier today, I sat down with Steve Osho, a co-managing partner at Commercio Partners Limited, for his views on the 2026 appropriations, the revenue and deficit outlook, as well as what to expect on the markets in the new year. This is an excerpt.
I think the major issues when it comes to the oil receipts or oil revenue generation has been addressed through the petroleum bill. I think the rest is around security and making sure that we were able to account for every oil that we generate. And I don't think it's far-fetched from the government point of view. I don't think it's rocket science to do this. We have our own peculiar problem when it comes to theft and all the issues around security. But I think right now, based on what is going on in Niger Delta, we've discovered that has actually been, brought to BRS minimum. And I think they just need to work and improve on that. If Saudi Arabia, Aramco, can account for every drop of oil in that country that was explored, there's no reason why we can't do that in Nigeria. There's no rocket science about these things. It's about the genuine interest of the government and the collaborations of all the stakeholders to work together and get this thing out of the line. I think we're getting there in terms of the production, because we've seen that most of those leakages in terms of people trying to run pipes or steal oil from the pipeline of the government has actually reduced. At least we moved from the 1.2 million barrels per day to around 1.4, 1.5. And from the budget, you see that the government too is actually very moderate. You know that from time to time, I think from 2020 to 2025, thereabout, we've seen them put the budget around 2 million barrels per day. But we've seen that it's actually a very tall task. So now we've come to realization that, okay, oil prices going down is not that aggressive in the oil market. But if you can get the production within this capacity of 1.8 million, which we're just short about maybe 400,000 or 300,000, circa 300,000, then we can get a lot of revenue. And don't forget that even from the GDP rebase, there's been a lot of this emphasis on oil. So most, in terms of revenue generation and that can contribute to GDP, had been moved to non-oil revenue. So if we can get 1.8 million barrels per day as a target for 2026, and the oil price remains within the budget levels that the government is looking at, all we need to do is just to make sure that the government focuses more on other non-oil sectors.
I'm sure by now you're receiving phone calls and having conversations with business executives, CEOs, as to what your outlook is at Commercio Partners for 2026. Well, what are the concerns of business executives and investors, industrialists and others about what lies ahead for next year? What are you hearing on the ground?
So from the political point of view, we've been hearing a lot, actually. Everybody wants to know what's going to happen. And just recently, we had our strategy session to look at 2026. Playbook and all of that. So I think from the political point of view, we all agree that it does look like pre-election year 2026, we're not going to see much in terms of challenge to the current administration. It looks like we might have an easy election in 2027 and might see this incumbent coming back in 2027. That said, it means that the policy that has been rolled out for the first term will probably continue in the second term, and with maybe slight adjustment into all those things that they think is not working. And what it means is that there's going to be a bit of stability in the country when it comes to exchange rates, when it comes to inflation, when it comes to interest rate. So that is what we're looking at. But we cannot move our eyes away from other exogenous factors that actually can change things, geopolitical tensions and all the other geopolitical issues that actually might arise during the course of the year. But generally, I think from where we are right now, we've seen the Central Bank of Nigeria adjusted the MPR to 27% from 27.5. We've seen them adjust the asymmetric corridor to about 250 to 450 now. And I think that signals a bit of what I call, I don't want to use quantitativism, but it signals a dovish stance from the central bank.
So you folks at Commercio thinks that there could be a rate cut in 2026?
I think they are going to look at all the data. They're going to look at the inflation number. They're going to look at the GDP performance. They're going to look at a lot of other macroeconomic factors. And I think that said, with all the parameters we've seen now, it doesn't look like we are being spooked by any of those data. So I think the first quarter, second quarter, there will be some kind of study. I don't think anything's going to happen for the first MPC meeting in February. Maybe thereafter, we actually might see some dovish stance or some adjustment of the MPR going forward. However, I think from the kind of government borrowing that we're looking at in 2026, 17 trillion is going to be borrowed from the market. I think 80% of that will be done through local borrowing, and the 20% will be done from the international capital market. That might cause a bit of yield to move up slightly. But that said, there is a lot of liquidity coming to the space next year as well. Between January and June 2026, I think we have over 27 trillion maturing in OMO and bills. So that will account for something. And that will account for some investment that need to be reinvested. And don't forget that the PFAs and the FPIs are still looking at Nigeria. A lot of them are still in the country. A few of them are still coming to Nigeria because of what we've seen in terms of the exchange rate stability. The volatility has reduced, and that said, it means that a lot of them will be looking at our yield curve, probably T-bills, bonds, and a lot of them will be looking at equity as well. And coupled with the recapitalization that's going to happen for banking sector and insurance sector next year, there's going to be a lot of opportunity in that space. So we see more positive than negative in 2026 from the macroeconomic space. And I think from the investment point of view, we're going to see a lot of investment opportunity in 2026.